All right, we're a couple minutes past the hour. Welcome to the session today on unlocking payment efficiency. We have an absolutely fantastic group of panelists and looking forward to having an engaging discussion today across sort of a multitude of topics about the overall payments value chain. My name is Brian Demir. I'm head of payments at Plaid. Really looking forward to the discussion today. Let's just start with introductions. Like I said, we've got a really great, varied group of experts here from a multitude of different companies. Dan, why don't you kick us off? If you could just start with your name, sort of your background, and then sort of a little bit on your company and what you focus on.
Sure. Thanks a lot, Brian. Hi, everyone. My name is Dan, and I lead our product teams at Valen that handle money movement across a number of areas, including payments, investor reporting, and our banking platform. So to give everyone a little bit more context on Valen as a company, so Valen is a mortgage servicing technology platform, and our mission is to empower homeowners at every stage of the home ownership journey. So for those that are not familiar with mortgage servicing, it really plays a crucial role in the mortgage ecosystem between homeowners and mortgage investors. And our platform requires a wide range of payment processing and money movement capabilities. And we're primarily focused on collecting homeowner mortgage payments. And those payments then are held in appropriate custodial accounts and then ultimately remitted out to our mortgage investors. So unlocking payments efficiency is super critical for us. Today, we're servicing over 300,000 loans, and we move over $2 billion per month across more than 100 bank accounts. And we're really excited to be here, and we leverage Plaid and Modern Treasury every day for handling homeowner-facing payment processing, as well as all the money movement that I just talked about.
Thanks, Dan. Shishma?
Hi, I'm Shushma Zellner. I'm the CPO of Closing Lock. I have over 20 years of experience in the tech industry, lots of different sizes of companies and startups and publicly traded across many different industries. But at Closing Lock, I run the product design and engineering team. We are a software platform that offers solutions to title and attorney offices that focus on facilitating real estate transactions. So our angle is really more on the fraud prevention side, and that can kind of be in two areas. One is really on the data transfer. So how can we more securely transfer information between title companies, attorney offices, and all the different buyers and sellers that are involved in purchasing a home? And then more on the fintech side, we actually have a payment solution that allows home buyers to actually transfer funds from their bank accounts into the title company's bank accounts to facilitate that home transaction. You'd be surprised how much fraud there is in real estate from the seller impersonation side, where people are selling homes that or properties that aren't even owned by them, to sending the money to the wrong place. And lots of different people are affected by sending money to the wrong place and not able to recoup their funds. So we're really trying to solve like a real problem that affects lots of Americans in the US.
Right. Thanks, Shishma. Galen?
Hey, everyone. Really excited to be here. I'm Galen Grady, VP of Strategy and Operations at Navan Expense, where I oversee sort of the day-to-day run the business of Navan Expense, managing all our users, the card payments, disbursements, as well as our admins and our finance and accounting partners. Navan is a travel and expense management software company, right? And our goal is making the whole business travel experience painless, right? Painless for users, making it easy to book, making it easy to travel, and making it easy to expense when you're on that trip. And then also save companies time and money, right? I've been at Navan for 2.5 years. Prior to Navan, I was at eBay, where I worked in payment operations. And then prior to eBay, I was in consulting for over a decade and worked at EY Parthenon.
Great. Thanks, Galen. And then finally, Cameron.
Awesome. Thanks, Brian. Hey, all, I'm Cameron. I'm the head of success management at Modern Treasury. For those of you who don't know, Modern Treasury is a payment operations platform. So we partner with customers like Closing Lock, Valen, and Navan to help track, reconcile, and move their money all in real time. So I'm responsible for the customer-facing teams who get to work directly with the customers to implement our solutions. I'm excited for the chat today.
Fantastic. And then finally, I introduced myself, but if you're not familiar with Plaid, Plaid is a fintech company that's focused on bank connectivity in general. We are used to connect bank accounts to a multitude of different use cases. One of those use cases is payments, and that's what we're going to focus on today. And both Plaid and Modern Treasury have a partnership of which overlaps with all of these customers that we're going to discuss today. So before we dive in, just a couple of very brief items to talk through. We are going to have a Q&A at the end. So I would ask that everybody please submit questions via the Q&A functionality in Zoom. We're going to reserve some time at the end, whether that's specific to some of the topics that we're going to cover, or you want to dig deep into something that someone said or some of the solutions that we're talking about today. Please feel free to put those in. And we will be recording the session, and we'll be following up via email from today's discussion. Great. So from there, let's dive into the discussion. Now, I find payments really interesting because it's this super wide world. You can go a lot of directions with it. You've got cards, you've got local payment methods, you've got cash. But I think today we're really going to focus the discussion on bank-based payments. You might call that pay by bank. It's such a new space. I think we haven't even decided kind of what to call it, but bank-based payments. I'd love for a couple of you, and I think Galen and Dan, I think your use cases are pretty straightforward. So if you want to chime in on how are you using bank-based payments? And in particular, how do you see the value chain of like the different solutions that you need and like what the customer flow looks like going through that? Whoever wants to chime in first, that'd be great.
Sure. Well, like I said, Navan, we do travel and expense management, right? And while we do encourage corporate card driven payments, right, being able to reimburse employees for out-of-pocket spend when they're on a trip is really table stakes for any expense management software. I think all of us have done business travel. All of us have gone out of pocket and need to get paid back. And the old world is doing that through payroll, right? You download all the transactions, you upload them into your payroll provider. That's slow and inefficient. The even older solution is petty cash, which, is a nightmare for corporate controllers. So really the better solution and the more modern solution is for T&E providers to pay directly to an employee bank account, right? Doing that service for your company. And to do this at scale requires managing thousands, hundreds of thousands of bank account connections, and then making fairly small, honestly, reimbursements or disbursements in a given year. So when I talk about that value chain, I need a solution that's going to streamline establishing those bank account connections. It is going to be a 1 to hundreds of thousands type of connection that I need to make. And it needs to be fast and easy for the users. So when they're going and doing it, it's one and done. They actually do it. Otherwise, I can't get them their money. And then for the actual disbursements themselves, I need to manage that at a massive scale, right? We're doing millions upon millions of these in a given year. And if they fail, and some will fail, right? I need to get the reconciliation of that payment return and know why it failed so I can go back and surface to the user because I need to get them their money, right? The alternative to managing using software or a solutions provider is people in spreadsheets, right? Does not scale from an OpEx perspective, that's for sure. But also it's just destined to fail. And it's just too complex when you're doing it at a massive scale.
Makes a lot of sense. Dan, how about you?
And on the opposite side, right, one of the things that we as Valin, as a mortgage servicer, have to deal with is not sending money. We do plenty of that, but also pulling money from bank accounts as part of every homeowner's monthly mortgage payment. So as a mortgage servicer, every single homeowner on our platform, they need to make a mortgage payment to us every single month. And the primary way that these payments are collected today is via ACH. And that can be either through a one-time ACH payment or a automatic monthly payment that is based on some sort of schedule. But the first step in them setting that up with us, either way, is giving us the bank account details so that we can actually draft the payment from the appropriate place. And this is where we are able to leverage Plaid for bank account authentication. And I think that the thing that we really care about when we think about that upfront payments experience is making sure that it is robust, efficient, and ultimately seamless for the homeowner. And I think when it comes to introducing friction to homeowners as part of their monthly mortgage process, we want to make sure that that experience for them is as seamless as possible. And the ways that we're able to do that are avoiding friction in the user experience. A lot of homeowners, right, like they don't want to have to reach for that check or log into their bank account to find their account number or routing number information and then manually type that into a bank portal. Like that's just a thing that we should not have consumers have to do in the 21st century. And I think also from like our own internal perspective, from a correctness and operations point of view, ensuring the correctness of the account number information is also a big win for us. Because the last thing that we really want from an experience perspective when it comes to the homeowner is that they miss their mortgage payment, or they're falling a bit behind because they accidentally fat fingered their account number when they were kind of typing in their information into our portal. So for us, I think really having the ability to leverage technology providers like Plaid and the offering that you guys have to ensure that upfront payments experience is as seamless as possible is critical for us. And then I think once that payment actually reaches Valen, then, as I mentioned earlier in the intro, we have a very complex ecosystem of bank accounts that we manage based off of the various portfolios and investors that we work with in the mortgage space. And I think when it gets to managing that sort of money movement at that scale, leveraging the programmatic money movement and bank payment rails that Modern Treasury offers really allows us to kind of robustly manage all of the money movement across the different accounts that we manage.
Makes sense. So maybe to just kind of like summarize what I'm hearing in this is that there's like two kind of critical moments. One is like the account validation stage, right? Where the user says like, these are my account details. And like, that's one of Plaid's main value propositions, that you don't need to like manually enter, do penny drops and all those different things. And then you've got the pipes, you've got the treasury management and all of that. Like, where are you holding the funds? Where are they coming in from? And where do they go out on the other side? If we think about these two domains, and Galen and Dan, feel free to chime in, but also Cameron and Shushma, what metrics are we thinking about that you're tracking with your teams around operational excellence in these two domains, right? Like, how are you measuring success? How are you like measuring like improvement over time within these areas to make sure that you're kind of staying above sort of the expectations that you have within your business?
Yeah, I'm happy to start off. And you mentioned the penny drops. That's like a literal nightmare. When I was at eBay, right, we had tens of millions of sellers, and the worst thing in the world is when they had to do the penny confirmations.
Honestly, the
Absolutely.
term micro deposits, it like brings back nightmares for me because it was such a bad experience to have to deal with that.
Yeah. At Navan, we've got a pretty different perspective on app utilization than you might see at other companies. And Dan, I'd actually be curious if you have a similar sort of philosophy, but we measure success by how little your user needs to go into our app and do stuff. We don't want you to have to do that. We want to make it easy, right? So for us, getting that connection established the first time is critical. We want it to be one and done, because that means you're going to be smooth sailing for the rest of your time when you're getting your payouts. And then when you do submit an actual reimbursement, because you're going to have an out-of-pocket expense, we want to make it really easy for you to upload that. Just snap a picture, OCR, have it sent across and approved. And then we want to make sure that money gets to you really fast, right? We want to see that payment goes out and gets confirmed within 48 hours. So we are measuring how quickly that money gets there, right? Because if we see that it's taking a long time, it's going to be an indicator of a problem that we need to resolve and make sure that you, the user, are getting your money, right? So to support that, we need to have access to high-speed rails, like bank rails, that are fast next day, and have high fidelity of data on like confirmations and returns, because then it's going to kick out into an exception queue, right? And if we're doing that successfully, if we're getting these high rate of bank linkages, we're delivering the money fast, it means that the user is not spending as much time on our app, right? And we literally we clock how much time users use in our app because we want to drive that down. And so the less time they spend reconciling their expenses to payouts or re-entering their bank details, the more time they spend on their trip and doing things that they would rather do.
Galen, I really like the sort of customer centricity there, putting yourself in the shoes of the user, right? Like, they don't want to be in the app for a long time and they want their money quickly. And I think it's that sort of like end customer centricity is, I think, very important.
This might be a bad thing to say, but because I work for a business travel and expense company, I hate business travel and expense. I had to 10 years of my life in consulting, I wish I did it every Friday. No, I'd do it pretty much once a month. Standing over a fax machine, literally faxing in receipts taped on top of a piece of paper. And it's been just such a horrific experience, but that's what interested me in Navan is like, wow, like I can't believe that people have to do this, as part of their day-to-day job in the old world. So
Absolutely.
I get a good perspective of like, all right, if I don't want to do this, how can I make it easier on everyone else?
Agreed. Dan, real briefly, anything to add before we kind of move on to some other topics? Any metrics that you're tracking?
Yeah, I think completely echo a lot of the points that Galen made. I think in terms of efficiency, in terms of building a seamless experience, I do want to kind of emphasize part of what he said around timeliness and speed, right? And I think that for us, right, that's critically important, not just from a user experience perspective, because obviously we want to make sure that payments are processed to get to the right place as soon as possible, but also from the unique role that we play in the industry, kind of interfacing between homeowners and investors, right? Like the investors that we're working with, right? They have all of these requirements around when they need the payouts that we're collecting, how and when it gets to them. And I think there are also elements of kind of regulatory concerns around kind of how we process payments, how we credit interest and things like that when it comes to mortgage that are critically important for us to get right. So having the right technology and bank payment rail access to allow us to process and reflect these payments in a timely way is very important for us as well.
Makes sense.
Sushma,
Yeah, what I'm
I'm not sure
hearing,
if,
Adam, I'm hearing the word speed a lot, and then speed and visibility, right?
Yep.
Because if you don't know, okay, like half the funds landed, or you're not able to like understand, oh, there was a failure, and like how quickly can you respond to it? Sounds like that's very important. And actually, I think we're going to touch on sort of like real-time payments and faster payments in just a bit. Before we do that, though, I do want to touch on a topic that I think has been really top of mind in the industry this year in particular. I keep hearing the phrase like faster payments equals faster fraud, right? And I think risk and compliance in general is really on a lot of folks' minds, right? That as things get faster, we need to kind of get faster at how we respond to those overall trends. Shishma and Cameron, I'd love for you to chime in as well. How are you thinking about security and compliance in general? And like in particular, I mean, what should be like the main focus areas that like any really good payments manager is sort of concentrating on in this sort of like world of faster payments?
Yeah, I'll start. So in my industry in real estate, first of all, the regulatory and compliance varies by state. So you really have to keep on top of like what are the acceptable transfer methods that are available for that state that have been approved by that state. For like real estate transactions, all 50 states allow you to purchase property via wire transfer. Not all 50 states allow you to send money as a real-time payment. And so, Modern Treasury has been really great about being ahead of the curve and allowing us to be able to build out those solutions, but we haven't been able to leverage them as much because of the regulatory aspect of it. And I think you kind of brought up the biggest concern, which is, faster payments, faster fraud. So what we're doing is we're already putting a lot of that in place with the way we support payments today and wire transfers. Yes, they're slower, but the same kind of rules apply. So we use Plaid in particular to do a lot of the AML and OFAC screening to make sure that we're in compliance from a regulatory standpoint when we're transferring funds. And that's kind of more also in the lane of like identity management, right? So like learning more about the suspicious or the bad actors and who's actually transferring the funds over these bank rails. And so while we do kind of like the compliance bit, we go on above and beyond that by actually using Plaid identity verification as well that allows us to do KYC. We also look at the banking account information through Signal. There's lots of data that we can collect just by having access to some basic information about them. And so I would encourage, those that are listening is, seek out multiple vendors to be able to solve for this because there's a lot of data out there that you can kind of cobble together to figure out, is this person somebody we should be suspicious of? And do we need to do further investigation? Because that problem is going to exist whether you use real-time payments or send it as a wire transfer. The banking verification is another big component of that too, is if you know where the money's coming from and where the money's being sent to, there's a lot of tools in place and activity that you can look at to see, are these like active accounts or are these new accounts that were just created that are just holding accounts for where money could get quickly transferred out of the country. So those are all the things that we're looking at is how do we kind of build up that knowledge base and be able to create risk profiles so that we can gauge what the risk is when real-time payments is something we can actually use in real estate.
Makes a lot of sense. And I think a lot of folks, especially when they're like newer to like the whole world of risk and compliance, I think they struggle with kind of balling it all into one. And one of the things that I heard you talk a lot about is like there's almost the like user level and then the transaction level, and you do different things at those different at those different levels. Like at the user level, you're trying to figure out, are you who you say you are? Are you compliant? Might have obligations around that. And there's a whole set of like tools and solution providers, Plaid included, that can help with that. And then you almost have like the transaction level stuff where you need to say, okay, how do I feel about this transaction? Do I know the user it's coming from? Do I know the bank account that it's going to? And really bifurcating across those two things is one way to kind of get that overall dynamic under control. And I think another thing I heard you say as well is the trend line is towards instant payments. And I think the most forward-looking companies are applying real-time risk assessment to everything, regardless of the speed of the pipe you're going to pick. Because over time, it's all going to move to those faster rails. So you might as well then have that be generic risk assessment across everything. Curious if anybody wants to chime in on that topic. Is that the philosophy that you've chosen?
I agree. I think there's some weird reticence to moving to the faster rails. Maybe it's because it's like, oh, just fraud will happen faster, but like it's going to happen eventually. So you might as well embrace it immediately.
Yeah,
Makes
I think
sense.
I'm going to add, I think from the faster payments perspective, like we work with customers across all different industries and use cases. And so I think it's super cool to see how, in real estate, for example, with title, like it may make more sense because someone needs to close on a house faster than someone who's maybe a marketplace who's looking to pay out their vendor or something. There's obviously ways to monetize, when you do faster payments too. I think for us, one of the things that we found is like historically with bank information and like intraday reporting, for example, you were getting that on a certain cadence from the bank, or prior day reporting, which comes every 24 hours. And with real-time payments, one of the things that we've adapted to is, working to get those webhooks from the banks as quickly as possible. So if you're sending out an instant payment, for example, how do you get that confirmation back instantly? And you can decision, again, maybe that payment is going out super quickly, but can you make decisions after the fact and learn from the data and the trends that you're seeing? So that's just another tidbit to add from our side.
Brian, if you don't mind me asking like an institutionalized questions are going to be for you, if you could jump in. Like in the housing industry, cash offers typically beat out mortgage-backed ones, right? So would real-time payments give you more, I don't know, would it be bringing those things onto more par where you can confirm and have more instant availability of payments that you could compete with cash offers better?
Yeah, I mean, just because of the risk of return, I think there's a lot of, and that's the thing, like in real estate, they want to make sure that the funds can't be reversed. And I think that's what real-time payments offers.
Yeah.
There are limits on real-time payments as well. So if you're buying, a $5 million home with $5 million of cash, it would be pretty difficult to use that bank rail. But I think for the normal home buyer, I think it's probably, it's going to be a lot easier, I think, for them to be able to do that. I think many of us who are trying to leverage request for pay, which is kind of like the debit portion of it, like we don't love the user experience. There has to be some, acceptance of this type of payment from the bank application that they use. And so we don't love that type of friction, but get it because it's preventing, or it's reducing risk. But that's something I think we kind of all need to sort out together is how do we sort of get around that and provide clarity to the consumer. Like these are the things you need to do in order to transfer these funds. But yeah, I mean, I envision it kind of changing a lot of how real estate transactions are done in the future.
I actually have an interesting anecdote in the real estate space. So I spent a little under a year in the UK recently, and in many respects, the UK is about 5 years ahead of the US in terms of just real-time payment adoption. And the rental market there is very competitive. And I was doing a viewing of an apartment, and the agent said, "We'll take it offline as soon as we receive funds." And I actually transferred funds with my UK banking application, and she got confirmation right then and there and took down the listing. So I was able to secure the apartment. So we do see in markets in which like real-time adoption takes place, that behavior changes exactly to Galen's point. Now, whether or not that ends up for $5 million homes, a man can dream, but I think that's the overall clear trend line.
Yes.
Yeah, I think you do touch a big portion of it. And I think we all talked about speed, but I think transparency is actually what people are looking for, because if they're spending lots of money or even small amounts of money, they want to know that it got towards going. And I think with real-time payments, it obviously takes the stress out of the whole thing, which is, you're probably going to get it there in minutes and tell them instantly, hey, the money's there, you're good. And that's, I think, the value of it.
Yeah,
And I think one thing to call out is that regardless, I think for some of the participants like on today's session, it's like when you are in a financial ecosystem, right, regardless of what your own company's risk assessment or decisions are on like what payment rails you feel like you're comfortable using, depending on kind of the adoption of things like RTP or other types of payment rails. I think one thing is that like you can't sometimes, depending on the business that you're in, and this definitely applies to us, you can't stop other people from trying to use those payment rails to send money to you. And there are a lot of kind of complexities around like once you have received money in a certain way, can you recognize that in the right way? Can you do the reconciliation appropriately? And for us, right, it's like we don't actively use any real-time payments today internally in terms of payments that we initiate, but we have seen a lot over the last year. And even in the last like 6 months, this has picked up significantly where homeowners that are choosing to, pay off their mortgage, right? Usually this would have been sent to us via wire, right? An increasingly higher number of them are sending that via RTP. And like the biggest advice I think that I can give to people is that like you can't always control those factors, and making sure that you have the right technology infrastructure that can flexibly support all the various payment rails that you might support is really important. And I think for us, like we were able to do that because of a lot of the, like working with Modern Treasury to be able to kind of support that infrastructure so that we had those rails set up, and then also appropriately handling the reconciliation after it came in.
Right. Yeah, the future is real time is my takeaway. Briefly, just want to give a plug of the Q&A at the end. So folks that are listening in to this amazing, engaging discussion, please plug in some questions. These are some great people to sort of ask for their expertise. So definitely a reminder to do that. We were talking about reconciliation, and that really reminds me of just like payment operations in general. And I always feel for either whether it's a payments manager or a treasury manager, they're always best friends with the CFO because they're always a cost item, right? Like whether it's like the cost of doing payments or the operational overhead of payment operations, I think it tends to be on a lot of folks' minds. I'm curious to hear from this group and really, anybody chime in, as a business scales and as sort of your payment operations scale, what do you focus on the most to kind of get those efficiencies as your business continues to grow?
I'll jump in. Navan, we're a late stage tech company, right? We are, and this is all public and available information, but like we talk about, the day we'll go public. And for us and these late stage companies like us, right, you really start to hammer in on efficiency at scale and lower OpEx, showing profitability, cash flow generation, et cetera. And so for me, when you're talking about scale, I need to manage these millions of disbursements. I need these hundreds of thousands of bank account connections. I can't do that with people. And I need solutions. I need products that help me and can manage that for me. We've had success here in managing that scale. And I like a little insight into what it means for us. I manage the disbursements flow. I have one operational analyst that is able to manage that because they're just managing the exceptions, right? We drive these exceptions down and we have the visibility and transparency onto why it's getting returned, what we can do, and so we can fix it. And so I only need one person to do that. I've only needed one person and I've kept that headcount static. So for me, it's really about not growing my payment operations, not growing my team, and instead relying on technology to solve the problems for me.
Makes sense.
Yeah. Fully agree on the exception piece, right? Like the part about payment efficiency that like ends up being the hardest to deal with is basically handling exceptions. And that's the area where you do end up needing like actual humans usually, right, involved in the process to resolve those exceptions. And the way that like I think we think about it is that ultimately everything in payments, right, it's putting as many controls and ensuring accuracy as upstream in the payments process as possible is like most important for driving down that ultimate exception rate. And I think that, at the scale that, many of us here on this call are operating at, even like a 0.01% exception rate can quickly become very difficult to manage because of the scale that we're at. And I think it's very important to build that in mind. And I think that for us, right, it's like thinking through at every single stage of the process, starting from the very beginning, right? Like what we talked about earlier, making sure that we get the appropriate bank account details by leveraging Plaid, right? Like that starts at the very beginning of the payment processing kind of stage of steps that we're doing, and through to kind of ensuring that we have programmatic money movement across all the different bank accounts at every single point in our money movement process. And moving that money internally between our accounts is robust, it's accurate. There's not any kind of manual operation that introduces potential sources of error throughout that process. And then I think lastly, even for situations where we are sending money out, right, to our investors or to other third parties, we have kind of controls and approval flows that are in place, some of which we put in place by leveraging Modern Treasury's platform. That ensures that all our disbursements also have the appropriate validation and review. And then again, like just reemphasizing at different stages of the process, ensuring that as much as possible, having accuracy and controls in place upstream is very important.
Yeah.
I really like that. Oh, after you.
Oh, no. I was going to say, I think what's interesting too about what Dan and Galen mentioned is like, I think sometimes, exception handling is inevitable in some cases, but on Modern Treasury side, I think just seeing we work with so many customers across many different industries. One of the things that we found really interesting is like, we have all these rates of returns. We can see that in our platform. And so if our customers aren't already using a product like Plaid, like our CSMs can actually work with our customers to leverage and say, hey, like this is your return rate. This is how many returns you have. If you're using a product like Plaid to verify these bank accounts, like you could eliminate the number of returns you have, therefore eliminating the number of manual steps you have to reach back out to the customer and ask them, hey, this was the wrong account number. This is the reason you got your RO1 return or whatever. So I think when we think about scale, like the exception handling is so important and returns can be a large part of that, but it is solvable through technology.
Makes sense. And one of the things that I'm hearing here is that like operations is the recipient generally of something broken elsewhere. And I actually think the really great operations teams are the ones that don't just obsess about creating efficiency within their workflows, but rather they're connected into either the solution providers or the product and engineering teams, like further up the funnel. I'd be curious if anybody here could chime in on like, how do you create that sort of culture of cross-functional collaboration within sort of payment operations? Any tips for folks that are listening in?
For me, it's about the numbers, right? And so I can report those numbers, the exception handling, and then tying it back to product experience, right? Because we all want a better product experience. And so for me, bringing the data to light, right? Like I talked to the product manager about how he can shave off how much time that users are spending in the application. He wants that. Driving higher NPS scores, right? And so I bring the numbers and it helps them prioritize as well. And I think they really appreciate these creative people, these hardworking product managers, engineers really appreciate sort of a data-driven perspective so they can focus and do really high impact things. And it's true with our partners. I share my information with Plaid, with Modern Treasury, right? Because we all want the same end result, really, right? And so for me, it's been about detailed reporting and sharing those numbers, being really transparent. Everybody, like within Navan, it's publicly available. Everything my team's doing, our performance is just available for everyone to look at. Because I think that transparency helps everybody, action on the high impact things.
Makes sense. Briefly, just a few minutes here. Let's go back to a theme that just like kept on coming up, which is just sort of instant payments and faster payments in general. To anybody who's relatively new to the topic, like they've heard the buzz phrase, like maybe let's just give a primer. Like, what is this? What is going on? Like, why is it important? Does anybody want to take an attempt at just like instant payments 101? Cameron, if you can't do that, right? Let's hear from you.
Yeah, I feel like this is on me. You guys prompted me for this question. But real-time payments, we have real-time payments. We have FedNow that just came out, and essentially the value proposition for these rails is 24/7, 365, being able to send payments instantaneously. They're irrevocable. I think when we think about it from, obviously Modern Treasury has been focused on faster payments for quite some time. But I think there's kind of different aspects to what the value proposition is. I think it's customer delight, which we've already talked about earlier in this conversation. How do we surprise and delight? How do we offer a better consumer experience? Potentially also optimize revenue for our own company. Do you charge more for that rail versus a different one? Cost savings, I think for the company, what we often find is that RTP can be a less expensive alternative to a wire or even a check. So when you think about cost savings, and then I think ultimately it's just the different types of industries. Like we have customers in real estate who are already using RTP. We also have customers in payroll, for example, where that has a significant impact on like livelihood of customers. So that's a little brief spiel, but I'm happy to dive in further, but want to give everyone else an opportunity to chime in.
Yeah, and I think the only thing I would add for that is like when I was learning about this new payment rail, it's like real time payment or RTP came out first, and then FedNow came out, and so people are like, "What is the difference between the two?" And really, it's not much. It's that one is more federally driven, and the other one's more of a consortium of banks. So Modern Treasury supports both, which is great. You don't have to worry about which one do you support because it's just kind of managed that way already. Um, so that would be the only other thing I would add to that.
Yeah, I'm gonna do a hot take on this one, which is like I actually think as an industry, we talk a little bit too much about like the underlying standards, industry bodies, like all that sort of stuff. Like, frankly, I think even payments managers, like the real nerds, will want to get into the details. I actually think in the end, solution providers, Modern Treasury, Plaid, others, we're going to hook into all of those different rails, but like the goal is just going to be API first and just route to the standard or overall rail that makes the most sense. And that's existed in the card world as well for a very long time, right? The idiosyncrasies of like, dual message, single message, debit, credit, different networks, pinless debit, so on and so forth, right? Like, I think ultimately it's going to be up to providers to abstract away that complexity.
I like that take because like if I just think about like my family members, they don't care. They don't care if it's FedNow, RTP, whatever. They just want the money to go there right now. And so yeah, I think it's true that like the great providers and great solutions are just we're just sending the money. That's all you have to worry about. Wires are kind of the same way. There's FedWire. There's I forget the other protocol, but like nobody actually knows that. Nobody
Yeah,
cared.
I
It's
didn't
a
know they
wire.
were.
That's why.
All right, pour one out for the folks listening in who care deeply about the idiosyncrasies.
Sorry.
Yeah, of course. Okay, we've got some great Q&A questions. We'll get to those in just a moment. But I did just want to then spend just like a couple minutes for anybody to chime in on, we've talked a lot about both the Plaid and Modern Treasury solution. As payments managers, treasury managers, et cetera, are setting up these sorts of solutions, what advice would you have? And it doesn't need to be specific to Plaid and Modern Treasury, but just like as you think about solution providers, like how do you think about like how do you select one? How do you think about integration? What are some of the lessons I guess you've learned as you've gone on these journeys in your organizations?
Yeah, I think both Dan and Galen touched on this a bit. Is just like mapping out what the process is and what problems you're trying to solve in that kind of value chain. And then figuring out, okay, are there vendors that can take pieces of that off of your plate? Is it a commodity or is it something that you feel like you can build IP around? I think for me, I did an exhaustive analysis on identity verification solutions in the market. There are hundreds. And many of them do the same thing and they tap into the same databases. What was a game changer for me was the technology stack and how easy it is to integrate and how forward thinking that technology provider is and kind of taking our feedback and changing things as a result of that. And so out of the hundreds, we've selected a couple that we felt like were that it has paid back in dividends. Like I'm really glad we chose the partners that we did because if I had gone with some of the other ones, we probably would still be here and none of my problems would have been solved, or they would have made us integrate with their technology stack in like a very archaic way, like using SOAP interfaces if people still use that, versus, more traditional APIs that you would expect and having webhook events and things like that to listen back on. So that would be my advice is, yeah, the one that, sells you on all the little shiny features and stuff like that, great, but also look at the company itself, how they run their business and how they listen to their customers.
Yeah, I've heard the adage that like a RESTful API is like a very positive indicator. And if you hear phrases like batch files or other things like that, just kind of run for the hills, right? And I think there's a clear bifurcation of the industry between those that like really see this as API first and those that are kind of in a previous generation, as it were. Any other thoughts on providers, tips?
Yeah, I think to echo the kind of critical decision that I think we all have to make in terms of like buy versus build at every single step of the value chain when it comes to payments. I think we all, are faced with lots of different options, different decisions. And I think that for us, when we're like, a lot of us are working on like companies that are scaling, right? You only have so many resources that you're able to focus on things that like really drive your business forward and really allow you to build things that are truly part of your competitive advantage as a business, and really focusing on kind of those things. And then on the areas where you think you can find, great offerings from great providers like Plaid and Modern Treasury is like really important. And then would like very much want to emphasize what Sushma said around kind of the types of partners that you choose, right? And I think that the technical caliber also of not just like the product itself, but also the people, the customer success team that you're going to be working with is like really critical as well, because I think that in the ever-changing landscape of payments, right, and a lot of the kind of highly regulated spaces that, a lot of us work in, being able to have a partner that you can rely on that also has the same level of technical sophistication to help you troubleshoot and actually brainstorm innovative solutions to actually figure out like how to best resolve this type of new problem or new edge case or new situation that you're running into, or a new regulation, be that if that's like the situation you're in, is like really important. And we've definitely seen that in the way that we've been able to interact with kind of you guys in terms of helping us not just like have the right conversation from a technical perspective, but also be able to drive an innovative solution to the problem that we're having.
Okay, great. So the tech's got to be great, but there also has to be really great people, right, to support those ever evolving changes. Makes a lot of sense. And I think on multiple times in this discussion, we talked about value chain. I actually think, like, surprisingly, a lot of folks haven't just sat down and said, like, from left to right, like, what does the user journey look like? What do I want it to look like? And what providers do I have along the way, and how do they all talk to each other? I think that's like by far the best starting point. And I think the companies that have like a really opinionated vision for like what that journey is going to look like, and then from there walk backwards into solution providers, those are the ones that end up in a much stronger position, I think. All right, let's get into a little bit of Q&A. I'm just going to like name out the questions, and whoever wants to sort of unmute and jump on it. So one of the questions was, the panel here is mainly supporting payments for use cases where credit card transactions aren't logical due to the high AOV. For a higher volume, lower AOV use case, how well is bank-to-bank payments being adopted? And what is Plaid doing currently to support consumer experiences for that use case? I haven't answered that question, but I'd love to hear someone else kind of take their pass at it first, and then I can chime in from the Plaid perspective.
I did talk about a little earlier that like my use case is for low value transactions, right? Like your cup of coffee, right? $5. But doing that at extremely high volume, right? Every single day, just thousands of transactions. And it's worked very well, these bank-to-bank transfers, right? Like, frankly, it's pretty cheap, right? The banks, they've really worked these costs and these fees down, so it's efficient from that perspective. And users adopt it as well, because I think it's because they don't have to pull out their checkbook and type in their account number, right? Like, don't even have a checkbook probably. And so like building these bank linkages has made it pretty easy to do these bank-to-bank transfers.
Absolutely. So if we think about the pay-in side of this question, I think there's really three very different use cases. You've got what we would call account to account, which can be anything from like loading up funds into a fintech application or a wallet or something like that. You've got bill pay, which is sort of like discretionary and non-discretionary sort of bills and utilities. And then you've got like pay by bank, and in particular, sort of like the e-commerce space, let's say. I think the maturity curve is going in that direction, where account to account at this point, bank to bank is sort of the name of the game, right? Like every wallet is trying to get you to plug in your bank account instead of card. If you're going to be loading up funds into a brokerage or anything like that, it's going to be that. And like that varies in terms of AOV, right? Like wallet use cases can actually be quite low. Then you've got bill pay, where it's really about either taking away that manual flow of manual entry and turning it into a more seamless use case, like with Plaid, for example. But there's a lot of lower AOV bill pay use cases that kind of went the way of cards over the last 20 years, and those billers are trying to pull it back. And they're using incentives, and even mandates in some cases to kind of bring back payment, pay by bank as like the main flow within that bill flow. And then I think you've got pay by bank, where I actually think we're in, for the last year or two, a very fascinating moment where a bunch of payments managers have stepped up and said, hey, the technology seems to be ready now. Let's see how consumers are going to interact with this. And I will say the brands that have already an existing sort of expertise in driving user behavior. Either they have a loyalty program or something like that. They're the ones that are doing the best at then driving this sort of consumer adoption. They're able to say, okay, we're going to give you a few extra points if you plug in your bank account instead of your, sort of super high premium credit card, right? So I think it's really, you need to look at it across that spectrum. And I think there's different levels of maturity, but the overall trend line is very clear, even at the lower AOV. Another question that we had, you find that RTP and FedNow payments are any easier to reconcile than wire transfers? Maybe Cameron, this is you, but anybody else feel free to chime in.
Yeah, I mean, I think for us, it's, the information, the transaction data that we're getting from the banks can slightly vary based on RTP than it can for Wire and ACH. So I do find that it reconciles better than Wire. Oftentimes with Wire, I think we also, as we all know, sometimes you have to use like virtual accounts or tools like that in order to reconcile one to one. So yeah, at a high level, yes.
Yeah, the only thing I'd add to that is that's a big part in real estate is reconciling every single payment that comes into your bank account, your escrow bank account. And wire transfers are limited in how much information you can pass through on that. Whereas real-time payments does give you many more fields to provide that. And I think that's one of the intentions of that rail. So I'm pretty excited about the ability for us to be able to transfer funds that way because it just gives us the ability to share more information along the way.
Right. We got another question, and I can't help myself with this one. So why choose Plaid over the growing number of other providers that are attempting to solve similar problems? I think that's a great question. The fact of the matter is that the banking ecosystem in the US is varied, right? There are many different types of institutions, from your very large banks that we all know all the way on down to your local credit union. And ultimately, bank connectivity and account validation is about having the highest quality comprehensive connections across those banks as a first step. And that's something that we've been doing for 11 plus years now. And that's something that you only get better at over time. It's sort of like the superpower of any company. But ultimately, what we're finding is that the differentiator in our space is the network effect that we're able to provide. At this point, Plaid has actually seen over half of American consumers. We've seen them before. So we're either able to create instant sort of like one-click experiences to do that account validation. And then from a fraud and risk standpoint, the overall data visibility that we have on user behavior makes the overall decisions that we're able to drive with our machine learning models better. So that's the mini pitch on Plaid, if anybody's curious. We had another question, which is, how does one get started accepting RTP and FedNow?
I'm happy to take that one. So it really depends on your bank and your banking provider. So there's kind of two different sides. There's the sending RTP payments out. So like, from Valon, Avon, and Closing Locks, if they want to send RTP payments to their consumers, you have to work with a bank that currently supports that. So when it comes to RTP, you can think of some of the bigger banks, JP Morgan, Bank of America, or just a couple examples. And then FedNow, I think Shushma, you mentioned, like it's a lot of different, potentially smaller banking providers. So that's the first step. Your bank kind of has to accept it. And then on the consumer side, your consumer's bank also has to be able to accept those payment types. So one of the things that we do on our side is our customers might say, hey, we want to send an RTP payment. And if our consumer's bank doesn't accept it, we'll fall back to ACH. So from a user perspective and consumer experience, it's pretty seamless. But yeah, there's two different sides. There's the like your bank has to support it as well as your consumer.
Yeah, and I hear it's very much a leading indicator of the bank provider that you're using for bank payments. And like, if they have a firm answer on like, yes, we already have it, or yes, it's in our roadmap and here it's at, that's generally a good sign. If you're working with someone where it's like, we're just kind of on the sidelines and watching, like, there's really a moment right now where I think a lot of companies are then thinking of sort of switching their bank provider based on having this availability. So it really starts with just asking, as to your point, like, do you have it, right? It should be plugged into the existing bank transfer solution that you work with. And if it doesn't, then you potentially need to go shopping. Want to be mindful of time. One last question, and then we're going to do a wrap up. So related to international and FX payments, say exotic currency, Navan, is your 48-hour end customer payments SLA happening today? If so, what does your partner ecosystem look like? So I think the general question is like, yeah, how are you doing sort of like non-USD in your ecosystem?
Yeah, because the reality is that like you sign a multinational customer, they're going to have people all over the globe, right, that want money in all these kinds of different currencies. So I'll give you a real inside look here. We do hold accounts in multiple currencies, right? And we really try to push on local rails, right? That's the way you can get the higher fidelity information. You get better data than you would with an international wire transfer, especially on returns and confirmations. And you generally can have a push payment system that is on that local rail that is quite fast, right? And so we really don't see it. So like if I look at my Australian rates versus my USD versus my GBP, it's pretty much the same, right? Because we're relying on those local rails. But that means that does mean having bank accounts in multiple currencies and pretty much your functional currencies. And then for all the exotics, being a lot of a multi-currency wallet solution where you can just drop in a lot of USD and then have that banking partner actually do the conversions for you, and then working with them to minimize the FX costs on those conversions.
Makes a lot of sense. Thanks, Gillen. Want to be mindful of time. So in the closing minutes, I just have one prompt for everybody to do just a quick lightning round. Looking back on your career in managing payments, and you're talking to someone who's relatively new, what's the one tip you generally give someone that's new to payments? What's your one sage piece of advice? Cameron, let's start with you.
Yeah, I think from our perspective, I'll speak a little bit differently, but I think it's working with the solutions architect. Like at Modern Treasury, I think we have a team of experts. And so if you're purchasing our solution and you're curious, like, how can I get the most value out of this? How can I make sure I'm doing this correctly? Like our solutions architect team is amazing and they've done this before. They've helped customers think through all the edge cases and use cases. So I say sometimes it's helpful to like go deeper with those solutions.
Right. Dan?
Yeah, I think that the best advice I can give is don't be afraid to ask questions and leverage the amazing network of people that have a lot of experience in the industry. Like, I think that, payments incredibly complex, lots of specific nuances that I think you only really get to learn as you are in the industry. So whether it is people that are at your company, people that are in the industry, people at partners or vendors that you're working with, really be open, especially at the beginning, with trying to get as much information, knowledge transfer them as possible. Don't be afraid to ask questions. Don't be shy. I think all of us that, have now experienced a lot about payments, I think we're all more than happy to kind of share our best practices and knowledge with people who are newer to the space. So definitely don't be afraid to kind of ask that, because I think it can be an industry that seems really intimidating from the outside. And I think we've all been there before. So I think we all understand kind of how hard it can be at the beginning.
Right. Shishma?
Yeah, I would say take it as an iterative process. You kind of don't know what you don't know until you get immersed into it. There are a lot of articles out there, but I think getting some great contacts at some of the vendors that you work with is really helpful to get into that. I would also say, from a technology standpoint, we've certainly operated in an iterative fashion, and so keep in mind you are dealing with real people's money, and that's really a stressful situation. So don't go out of the gate with a bunch of customers. Start slow, learn from that, and put as much as you can into place in terms of recognizing patterns and alerting, because the worst thing that can happen is your customers are pissed off because they don't see the money where it's supposed to be. As much as you can work on getting to be in a more proactive approach where you can see some of those patterns and alert your team, I would say that's been a saving grace for us.
Makes sense. And Galen, close us out.
For sure.
Sage advice.
Yeah. It's gonna be kind of along the lines of what Dan said, in that if you're new into payments, this is actually kind of a small industry, right? It seems really big, but everybody knows each other, right? And we probably all have one colleague in common at some point in our careers. So it's about making a really good connection and good connections with other people in the industry. And Cameron, I think you said that there's a lot of articles out there. Yeah, there's a lot of articles out there, and it's pretty dense. But if you can just spend 5 minutes talking to somebody about it, whether it's at a conference or whether it's just over a coffee somewhere, it actually clicks a lot better. And so I do think it is about making those kind of connections with people in the industry. And frankly, it's going to be good for your career as well.
Agreed. And in that vein, I guess I'll volunteer everybody. Feel free to add folks on LinkedIn off the back of this. Ask any questions myself and everybody here. And actually, a small plug, I would imagine a fair number of folks here are going to be at Money 2020 next week. So feel free to hit us up at the Plaid booth. I'm sure Cameron and Modern Treasury are going to be there as well. Just wanted to thank everybody, Cameron, Shishma, Dan, Galen, for a really great discussion today. Like we said, we'll be following up with a recording of the session. And folks listening in, don't hesitate to reach out. And thanks again, everybody, for the great discussion. Appreciate it.
Thanks, Molly.